All right. Hello, hello. Can you guys hear me and see my screen? Can you guys hear me and see my screen out there? Thank you guys. Appreciate it. Can you see the discount codes at the bottom of the screen, the 10% and the 30%? Awesome. Thank you guys very much. Um, Before we get into trading stuff, we're going to do a big picture view for some of you out there who are maybe not subscribers or not in my room. I haven't done a big picture view on the channel in a while, so I'll do a big picture view to start off just so everybody can kind of understand. Because I did say we're in the market for a 10 to 20 year correction. And so the reason for that is twofold. So this is the SPX weekly chart, goes all the way back to the Great Depression, the start of the stock market, etc. So if we come all the way down to where we start, the 1, 2 here, 2 is the Great Depression and only took about 4 years and was a pretty fast zigzag down. So you had your A, B, and C, and then we started the bull market. Excuse me, wrong 1, 2. There we go. Only lasted 4 years and was straight down, and the market lost, whatever, 80% of its value or whatever. So you had your A and B and C here. So we're looking at the larger degree wave 4 once we do top in this major market top. And since this was quick and fast as a zigzag, you would expect theory of alternation to tell you that wave 4 will be long and drawn out as a probably flat type structure. And as we go up here, we're completing Roman numeral 5 in blue as our major cycle and super cycle 3 and primary 5 of that. And we're just in the end of that. So the reason we would expect 10 to 20 years on that correction is, one, we saw wave 2 was only 4 years and straight down. This is wave 4 of a lesser degree right here. It was the 2000 crash. And that took us from about 1500 down to 666. So when people don't understand that the market can lose 2/3 of its value, they just haven't studied history at all. And really, a lot of that is because internet trading started right around in force. The internet trading started around 99 or something like that. But overall, in force internet trading came in the early 2000s, and people really weren't involved until probably the later to mid 2010s, where we've just been in a bull market ever since. So a lot of people don't understand that the market can lose quite a bit of its value very quickly. But this is wave 4 of a lower degree. It took 9 years to play out till we found the bottom, and almost 13 until we found a top. Or I'm sorry, until we made a new high. And so wave 4 of a larger degree, you would expect to be at least this big, but usually 1.5 to 2 times as big. So that's where 10 to 20 years comes from. One, you have wave 2 being a sharp move down, and 2, you have this drawn out wave 4 here that was, roughly 9 years. And I do think we're coming back to test the top of this. Price action 101 will tell you that the market will always come back to test breakouts. And we tested, or we came up here, came back down, we broke out finally, and then we never came back to test it anywhere in here. You can see that when the market breaks out, it makes a low, then it breaks out again, it comes back and tests that low, breaks out again, comes back, tests that high, breaks out again, and so on. Now, what the market has done, and people who question Elliott Wave don't understand the bigger dynamics of Elliott Wave. All the way back here in 2020 after COVID at around, it was probably around July or August, I put out a video called The Big Picture. And that called for us to go to 6,000 on the SPX, which is where we went. Now, to be fair, on this pullback, I did put out an update that said we may have topped here in January because wave 4 got into wave 1 territory, which is against Elliot's rules, unless we're going to make a diagonal, which we ended up doing. Diagonals are rare, so you take what's in front of you, and our primary path then changed to the top possibly being in at around 5,000 here. However, the market did go hit its target at 6,000, and now we're looking for a top in this area. Does that mean we've topped right now? Not necessarily. We can still make another high. But this is the area that the Elliott wave pattern called for, well before COVID, well before this. It called for the COVID drop. All of these things have played out using Elliott wave. On top of that, in 1933 or so, right around there, coming out of the Great Depression, Elliott called for a 100-year bull market, and we are at about 100 years right now, and we are reaching that 6,000 zone that was the target. So understanding Elliott wave means to understand the potentials, to understand the bigger picture, which often plays out, and to understand that in the smaller degree, you don't always get there the way the textbook tells you you're going to get there. For instance, this last leg has been an ending diagonal. Wave 4 got into wave 1 territory. That's not necessarily a common occurrence at that degree of wave, but it can happen. It's still a possibility and a part of it. And you just have to adjust and adapt and trade setups, and that's what we do. So that's the big picture. I don't want to spend too much time because I want to go through a couple charts as well. So we're getting ready for the indicator here. We'll get to that in a minute. This will be day trading on the SPY today. However, I pulled up some charts. We have Tesla here. And this is on the weekly chart for Tesla. I swing trade off the weekly. And you got a sell signal here back on the 6th of January that did not work out, stopped out, no big deal, but it was looking for weakness, and it was right. It was just a little early. And then you got a sell signal here at 405, 406, and they dropped all the way down to 216 in 7 weeks. So, you know, that's only almost a 200-point drop and almost a 50% cut. So if you're protecting your Tesla stock or trading options, just an incredible nail of not exactly the top because it has to find the weakness, but pretty darn close to the top, and saved you 50% of your money. Or if you got short here, you just banked. So there's one example. I'm just going to give you a couple examples here real quick. NVIDIA, you got a sell over here at 117. They dropped it all the way down to 90. So that was 27 points off of 117. It's like a 20% drop, 25% drop. You could have protected your NVIDIA stock here. You got a sell here that at 119, and they brought it all the way down to 100. So another 17% drop or so that you could have protected. This sell did not work out. That happens. I mean, it depends. I guess you got in at 134. If you took profit at 126 and then let the rest run and stopped out, you may have made a little money on it, but it's still overall not exactly what you're looking for. And then this sell here got you in at 136, and they brought it all the way down to 105. Another 31 point drop off of a $130 stock. The most popular in the world that no one would ever tell you to short. There's 4 shorts in a row. 3 of them were incredible, and 1 was maybe okay, but probably a loser overall. Bitcoin, told you to buy back here at 62,000. They ran it up to 108,000. And pretty much ran it up without any red. I mean, there's a few small red bars, but for the most part, you were never sweating. Told you to sell here. No big deal. You've stopped out most likely on the move up because you got the sell stop. And then it told you to sell again here at 94,000. No sell stop here. And they dropped it all the way down to 76,000. So like a 22% drop on Bitcoin you could have avoided and or bought back in when it gives you a buy signal and or. So a lot of different options you can use here. So that's how the weekly works. When you are setting it up for different stocks, it's IWJ Pivot Point Pro right here. You go to the settings. When you are setting it up, you do need to change these 2 tickers to whatever stock you're on. So in this case, we're on Bitcoin, so I have it set to Coinbase Bitcoin so that it's determining the values of this stock. However, when we're on the SPY, which we'll go to now, and again, this is day trading, so we're on the 5-minute chart. On the SPY, you want it to be set for, and all this is in videos. If you get the indicator, it tells you how to set it up. But you want it to be set for the ES and the NQ. The reason for this is we want all three markets to be moving in sync before we issue a buy or sell alert. We don't want price action on one to be signaling a buy and price action on another one to be signaling a sell, because very often that creates chop in the market and gives you a whole bunch of shitty signals. And we just don't want that. We want good, solid signals. So we look at all three markets that are tied together, the SPY, the ES, and the NQ, and assuming they're all in sync and the data underneath and the price action and everything else meets the requirements, then you get a buy or sell alert. So that's kind of how the indicator works, both in swing and day trading. We have about 5 minutes before the open, so what we're going to look at here is we're going to get ourselves set up for success. Right now, we're in a sell cycle, right? So they tried to buy it here, and the long got stopped out. So it's still trying to sell the market. So at the open, we're going to be looking for a buy signal. We're going to be near the pre-market low at the open, which is a great place to look for a bounce. It probably won't coincide. Let's see where the ES's pre-market low was. Okay, so the ES is basically at its pre-market low as well. So we would be looking for a buy signal. Hopefully we don't have a trend day down. Trend days are bad trading days for day traders because you're looking for reversals and movement in the market that allow you entries. If they're going to start negative for the day, which they are, if they're going to start negative for the day and then they just continue straight down, you never really get an entry. And those days aren't very fun to trade because you just kind of sit there and watch. So hopefully we don't have that today. Hopefully we get some moves and they test the high at least, and we get some good trades. Let me get set up in my room so I can get day trades out when they come. And then before we open here, guys, I do want to say the yearly indicator has never been discounted. I gave 10% off. It already has 2 free months because you get $5.90 for the whole year, so you're getting 2 free months by getting the yearly. So now you're getting 3 free months if you get the yearly indicator using year 10 as the code. You can see it on the screen there. And then if you just want to try it, for the monthly, you can get 30% off of your first month using the code month30. There is a link in the description that will take you right to where you need to be. What is TWA? That is Trade Waves Academy. That is on the site. You can get that for 50% off if you get the yearly indicator. That's another deal. It's March Madness, so we're doing some fun stuff. You won't see the indicator on the yearly basis discounted again till maybe my 50th birthday, which is next year, or maybe next March Madness or Christmas or something. But it's too powerful. It's too good. I sell too many of them. I don't need to discount it. But it is March Madness, so I decided to do that today. Like I said, I do need to get set up for trades here so we can do that seamlessly. So give me 1 second just to get myself to a place that I feel good. So again, we'll be looking for a call at the open. Hopefully they don't steal it from us here. Sometimes they do that, but we'll be looking for a call. That will be the standard. Volume is kind of low. Let me try turning up my microphone. Does that help? Maybe that helps you. Is that better on the volume? I don't talk very loud because it's 6:30 here and my family's asleep, so I try to not be overly loud, but oh, TWA on the screen is this week's average. I gotcha. Sorry, it's also Trade Waves Academy if you want to get it, but that's this week's average. So before we get in, we got about a minute and a half here. One, let's talk about trading just in real quick. This is going to be real quick because we could get a buy right at the open. I want to be ready for it. But Uh, Day trading is not a get rich quick scheme, nor is the indicator, nor is what we do. It is very, very detail oriented, disciplined trading with trade setups. The indicator gives you the trade setup, so you don't have to worry about those. And the the rules that I give you in the setup for the indicator, we use basically 50-cent stops. So right now we're at 564, basically 50. So our stop would be 564 roughly. Sometimes I expand those when volatility is higher, but it's around 50 cents for the stop. And if we stop, we stop. We don't chase. We don't go after bad trades. We don't do anything crazy. We simply follow the trading plan, and that produces winning results month after month, year after year. And not just winning results. I mean, last year we were 40-something% on day trading, 48% we outperformed the market, which is really the benchmark. If you're not outperforming the market, you shouldn't be day trading. So yeah, I mean, this is a detail-oriented, disciplined trading system that makes it super simple for you. It gives you buys, it gives you sells, it tells you when to get out. I personally don't use the stops. Those are for newer traders or traders that don't understand stops. It gives them to them. So today you may see me ignore a stop just depending on where my particular stop is. But those are the kind of things you want. This is a trading view only indicator. You do have to have trading view account. And if you don't have one, I have a link on my website once you get the indicator where you can get a discount on trading view. Okay, we're about to open here. So let's see what we get. So we rejected VWAP in the 21. That's this black line. Black line is VWAP. Blue line is the 21 EMA. So 21 period. There's a very common point of rejection and indication of trend, things like that. Just something to keep an eye on when you're taking profit. GEX levels come from a site called Mentor HQ. Mentor HQ. You have to get a membership. Just so everyone's aware, my strikes are usually, depending on price and volatility, one out of the money or right at the money, just kind of depending. Today will probably be one out of the money. So in other words, we're at 564. We're looking for a call, so our strike is going to be 565 at the moment. If they break below 564, we would obviously move that down, but at the moment it would be 565 as a strike. Hello, Luke. Good to see you. Good to see all of you. Sam, Luke. I got a lot of double names in here. Siva, Kevin, Noah. Glad you guys are here. So in essence today, patience is the name of the game. We do wait for a signal. We do take it as soon as it flashes. So if you do have the indicator and you're wondering, hey, the buy sometimes flashes on and off, that's because it is saying, hey, the data is ready for a buy signal here, and so we're giving you a buy signal, but it doesn't actually stay on the chart unless we get to close with all of the criteria met. So you may see a buy signal appear and disappear. I take the trade as soon as I see the buy signal, because very often you get a buy and the move is one bar, and that one bar is fantastic, and then the rest of the move is kind of weak. So I always take the buy or sell as soon as I see it appear. And we are looking for a buy here. And the reason we're looking for a buy is we're already down on the day. We are in a sell cycle coming into the open of the market. So we're looking for a low and then a reversal that meets our criteria. And there's about 150 points of data. I think it's actually like 159 or something points of data that it references as it's putting this together, with the focus being on price action so that it's forward looking. In other words, it's looking for very, very key support and resistance to bounce off of. It's looking for, of course, oversold or overbought statuses. It's looking for momentum. It's looking for volume. It's looking for all kinds of different things, congruencies, fib levels. There's just a million things. It's not an Elliott wave indicator. So if you're anti-Elliott wave, it's certainly not built on that. It's built on other things. From an overall standpoint, we didn't go in the short term, but from an overall standpoint, we are looking for a bigger bounce. I think 5,800 would be the overall minimum target, up to 59 and change. And then how we pull back off of that bounce will matter. Doesn't mean they can't make a new low right away. They can make a wave 5 low. If you watch my video from the overnight, it explains all of it in detail. But I think that's a little less likely. A pullback from here, not that big a deal. Pretty common given the resistance levels we got to yesterday. So a pullback from here is, or from yesterday's high, which is where we're pulling back from. A pullback from yesterday's high is pretty normal, assuming the bulls can hold and take it higher. If they cannot and this collapses, well, that's a different story. But as of right now, I would expect the bulls to be able to hold this pullback and then push higher. But we can't count out one more potential low yet. They haven't got high enough to do that. And when I say one more potential low, I mean before a decent bounce. That doesn't mean they're going back to all-time highs. It means that I'm looking for a decent bounce, and then they could absolutely melt this thing down much further. How does this work on weekly trades? Go back to the beginning of the video, Byron. Go back to the beginning of the video. I went through several examples of that. So when either now or when you get a chance, go back and check out the beginning of the video, and you'll see Bitcoin, Nvidia, Tesla. I went through those three for weekly swing trades, and the answer is it works really well. Foreign markets are breaking out, especially China. Yeah, China's had a big run. Emerging markets might be a good place to be in the future when we do start to melt down, if that meltdown is starting now. Obviously, we've been in precious metals for well over a year, and we have absolutely crushed that. The gold has hit over 3,000, and we outperformed the S&P. Last year, the S&P was up like 42%, and gold was up 47%. And this year, we're absolutely destroying the S&P in outperformance. So we moved our big money into precious metals because there was a much better, cleaner setup there to and there was a lot more risk in the S&P. Even though it did have a nice year, it's still at levels that are very risky in my opinion. And when the bottom falls out, as it might be now, you can see it's happening very fast. This was like the 5th fastest sell down of 10% ever, I think, something like that. All right, we're coming into a decent support area. We will see if we get any kind of reaction off of it. That call resistance level, 0 DTE, that is usually a pretty good area of support. The market makers want to defend so they don't have to hedge against gamma exposure. I personally only trade options push, but PT trades futures, and you can trade this on futures. All you do is switch the chart, and it will trade futures for you. So yeah, it's adaptable to whatever vehicle you want to trade, whether it's options, whether it's buy and hold. Buy and hold, you're going to want to use the weekly chart. But options, futures, whatever, you can use it for any of that stuff. I do hope today's not a trend day. Trend days suck. They don't suck because like the indicator sucks. They suck because they're just not great trading days. There's no entry. What we're looking for at the open is we're looking for a spike down and reversal or a spike up and reversal to get the day started. And we still can get that, guys. There's still plenty of places to get that. But if they do have a trend day, then trades are few and far between and generally not awesome because you're never getting an on-trend move in those situations because the reason is you are starting. So the pre-market high here is actually a little higher than that. But anyway, 567, you're already starting 3 points down. So we're never chasing the move. We're never going to be, oh, we're shortening the hole. We're just not doing that. The indicator won't do it because it's just bad strategy. Shorting in the hole is you're late to the party and you just miss the move. Sometimes you miss moves and you have to understand that that's part of the game, and FOMO is something to wipe off the table and get rid of because it's just not going to do anything productive for you. It's going to cause you to get bad entries. It's going to cause you to get emotional, and it's going to cause you to lose money. So sitting on your hands is a position, and unfortunately, when the market starts with a gap down and continues, until we get some kind of reversal, we're not going to get a trade. So one of two things is going to happen. They push through this pretty easily, the gamma wall. If they, very often they'll push through in reverse. So we'll look for a potential reversal coming here soon. You don't tend to see them push through support the first time without some kind of reaction. Or it's just going to be a really strong down day, which is possible. Another bonus for us if we get long, we're very far away in terms of the 5-minute chart from VWAP and the 21. We're almost 2 points away now and climbing, and the market will come back and test these levels. Testing the weekly low now from Monday. Where can we learn what to look for under the hood of the indicator? Teach to fish. That would be TradeWaves Academy. Or you can join the room. I'm always giving lessons in there and going over things. It's a slower process in the room. TradeWaves Academy is 10 modules. That is 2 hours each that goes through pretty much everything you would see in the indicator and how to put it all together and how to use price action for trading, all that kind of stuff. Okay, there's the bounce back off of the weekly low and back to that call resistance. So as I said, rarely are they going to spike or just plow through a support and not spike back above it. Now, whether they hold or not, that's a different story. But you're just not going to see them get through that's support. Get through a support level and not come back and test it out. Again, that's price action 101. Okay, we're looking for a long entry here. Hopefully getting one shortly. And guys, what we're looking for when we do get a buy signal is we're looking for a 20% win to take half off. And then after that, we're going to let our runners run. And we're never going to let that trade turn into a loser. So we either get stopped out or we take a 20% win and then set stops where that trade is going to be a winner. And when we get a break here, because I think we're about to get a buy signal. So when we get a break, I will go through why that works so well and why that's such a solid strategy. And then, kind of go through the math of it, if you will. So if you're buying options right now, it's like $1.80. So you'd be looking for 36 cents on your first take of profit. And then from there, you'd be looking for setting your stops and then a runner. Okay, so they spiked or plowed through the support, came back, spiked above it. I told you they would likely do that. They did. They so far have failed. Now they've definitely failed. That was quick. They have so far failed support. The ADD and the VOLD, those are internal signals I look at. They aren't terrible. They aren't nearly as bad as you'd think for a major sell-off yet. They can get worse for sure, but there is still hope for the bulls to find a low here and reverse. The next major options wall is going to be down here at 560. So we may have a little bit of a waterfall here first. But again, if we look at the ES chart here, to see this as an ABC and then a pullback and then something like this, that would be what I'm expecting here. This support level at around 56.63, 56.60 is going to be big. That should line up with that options level as well. So those are things we want to look for here as we continue to move down for potential reversal areas. And that's just general price action. That I'm looking for that because I know what the levels are and then what to calculate. So we're trying to get a bounce here off of 561 and what the indicator calculates. So I'm kind of looking for those things before they happen. But I also know I'm looking for a buy because we're in a sell here. So we're looking for a chance to reverse off of support. Monthly code says invalid. One sec. Let me go look under the hood real quick at my coupons. MONTH 30 is the code. Oh, I see the problem. Give me 1 second, guys. Sorry about that. That was my fault. I did not assign it to the indicator. Okay, the code should be working now. Sorry about that, guys. I did not assign it when I made it. So check the code now, and you should be good. Guys, there is a deal that I don't have on the screen. I know somebody asked about how to learn what's under the hood of the indicator, and that's the Trade Waves Academy. If you get the yearly indicator, even with the 10% off, you do get 50% off of Trade Waves Academy. And that comes with the beginner's Elliott Wave course, the advanced Elliott Wave course, and usually a month of the indicator free. But if you buy the yearly indicator, you don't need that, so you won't get that. But you get so for 10% off, you can get the yearly indicator. That gives you 50% off of Trade Waves, which gives you the free Elliott Wave basic beginners and advanced courses for free. All right, let's see if we can get a little long signal here. Year 10, I know works. It's been used twice already, so you're entering something wrong. No space on year 10. And it's got to be used on the yearly indicator, 60 service car. Try it again, and if not, I will. I can look into what you're doing. Maybe email me a screenshot. It's jacob@investwithjacob.com of what you're getting. But make sure you hit enter. When you put in year 10, hit the enter button, and you should see it work then. You have to hit enter to get it to activate. Guys, this is the only time that the yearly will be discounted, and that discount will expire at the end of this live stream. So if you want to try it out, it does come with a 30-day money-back guarantee, unless you've already had the indicator for more than 30 days. Like if you're upgrading from the monthly or something, then obviously it doesn't. But if you're new, it comes with a 30-day money-back guarantee, so you can check it out. We've looked at the weekly stuff today, slow so far, but if we go back in time, we can look at some days. Yesterday wasn't great. It was choppy, so we were about flat, about break even yesterday, but that's hard. I'll zoom out. We'll do it later. If there's no trades today, we'll go back through some of the day trades here, and we always get a trade, so we should get something, but we'll go back through some of the other days and look at their success because they're really good. Which members? Any of the lowest one is fine, Byron. You have a link. Hopefully, you saw the link in my on my webpage if you're getting a new one, because that'll give you a discount. And then you need CBOE data. It's the one that says E-mini included. I believe it's $7 a month for it, because you have to have real time on the NASDAQ and ES for this to work properly. And the reason for that is it is calculating the NASDAQ and ES as it's happening. And if those aren't in real time, it can't calculate it in real time. So your trades are going to be delayed by 10 minutes. So you have to have the ES and the NQ real-time data on TradingView. I don't think it shows too much information if I go to my profile, so I can show you real quick. Home, open link in new tab. Hopefully we don't miss a buy signal here. Uh-oh. Come on, computer. I'm sure there's some latency on this as well, guys, so just be aware of that. If I call out a trade and you're not getting the same prices as me, there is latency on these live videos. Oh. It is CME, CBOT, COMEX, and CME Group, E-mini included, and it's $7 a month. All right, Bulls unable to hold anything so far. I'm using the indicator for quite some time now. I love it. How do you handle signals that disappear again after you entered the market? So I always enter as soon as they appear, and if they happen to disappear, that is what it is. So if a buy signal pops up and this starts to go up, and then the market moves back down and you get stopped out, that's part of trading. But I take them as soon as they appear, and I mentioned that earlier. The reason is the buy signal or the sell signal can be very strong on the very first bar. In fact, yesterday that was the case twice. We had two winners on one bar. So those are things you want to take right away. Since we're kind of still selling here, we can go to yesterday real quick. I can show you what I mean. So this sell right here initiated up here at around 565 and then moved straight down to 564.57, and this was a winner. And this sell also initiated up near the top at about 565, and so it sold all the way down to wherever. Actually, this one sold down to 564, but this one sold down to 564.40. Was also a winner because we took it as soon as the sell signal appeared. And if we would have waited for the bar to close, we would have missed the move. Okay? So that's why we do that. So in my beginner's course, I go through how to identify trend days. There are several different things. One is obviously a gap and go. 2 is a break of the pre-market low. 3 is any backtest of the VWAP, and 21 holds. And so far, they do have that going for them. They are getting quite far from VWAP. They're over 2.5 points. They're going to come back and touch that here eventually. We're looking for that buy signal to give us that rally back and then see if they can break through. A lot of times they come back to touch it, and then they just keep going. So we'll see if they have any juice here for the buyers. I answered you, YJ. Getting a Clifford waterfall here, guys. Clifford, the big red bars. Let's zoom out a little here while we wait for a buy signal so we can see a little more chart. So we're coming into a major support level here. This break up candle zone from 560 up to this 560.86 level where they came down to. Actually, it's going to be 560.68. Excuse me, I had that backwards. And you have your call resistance down here at 560 as well. So this whole area through here should be an area the bulls try to bounce it. We'll see if they're able to pull that off or not. Are you placing market orders when the buy sell appears? No, I am not. I don't use market orders. You'll get absolutely screwed. I keep a wide limit. So let's say right now I'm looking at, I am 562 is right now trading at around 175. So I have an open window of a limit. I know that it's going to be higher than that. So I have it from like 185 to 195 right now. And that means the worst price I can get is 195. And then as price moves up, I move that window up so that I can hit limit order and still be within my limit range. And I'm not taking a market order, if that makes sense. So it allows me to get in as quickly as possible, get the best price possible without getting market ordered. How do I get VWAP not showing up on the chart? You got to go to indicators and then type in VWAP, and you can put it on from there. Guys, I see a few of you have gotten the indicator. I appreciate that. It's really hard to manage the access to it, but when I'm doing this live video. So as soon as the video is over, you will have access. I'll show you. You can watch the video on how to get it, but once you have it, I have to activate it. I have to give you access. But once that happens, you go to indicators right here, and then you'll go down to invite only, and it'll be an invite only IWJ Pivot Point Pro right there. All right, bull's still getting steamrolled here today. Again, still getting far away from their VWAP and 21 area up here around 563. So you're getting over 3 points away now. These are very large deviations of the norm, so we would be looking for a back test here shortly. What does it mean when a dot appears without LS or S? Okay, so that is a that is something we're working on in the background. You can turn those off, but it's for a squeeze, and we're trying to get it so that the red dot means a short squeeze down, and the blue dot means a squeeze up. We're still working on the code for that to get it to be more reliable. We don't put anything out that I don't believe in, and right now I don't believe in that facet of the indicator. So until that gets to a point that I am comfortable with it, it will not be anything. So you can just turn those off. And you can do that in the settings. Hi, Jacob. Ray here, ready to go with your best offer. Best offer is on the screen, Ray. You wrote me personally in the room. Let's see. Yeah, there's a link in the description, Ray, that takes you over to the website. You go to the indicators area, and then, in my opinion, I'm being serious. I'm not trying to sell you the big thing. The yearly 10% off, you're getting 3 months for free of the indicator, so it's so much cheaper. And I have well over a year's worth of data of trading this every single day that shows how powerful it is. So that would, to me, be the best offer, but I understand that that's a big purchase, so the 30% off for the first month isn't bad either. You'll never see these discounts again. I said it last live stream. I did 50% off the first month, and I said I'd never do that again, and now you see it's only 30, and you'll probably never see 30 again. This is guys, I believe in the product. I know we haven't had any action today. I apologize. I can't make the market give us trades. Just happened to be the wrong day to pick so far. But, this is a successful indicator over and over again. And I firmly believe it. I was raised by a guy from the South that, he was a go pick your switch kind of guy, which if you don't know what that means, it means walk out to the tree and pick the branch that you're going to get spanked with. And he taught me a few things, and one was your word and your credit are the only things you control. Never give them up, and never make them crappy. And two is never screw people over. And I firmly believe in what I do and what I have. I have a strong intention of helping traders. That is my whole goal in doing all of this at any given time. And so I know those are only words, and you don't know me from Adam, but if you've ever been in my room, or any of these folks who have been in my room want to comment, they'll tell you that I care deeply about my traders and about what I do, and I believe in what I do. So never think I'm trying to sell you on the big item because I want to sell the big item. I'm just trying to give you the best deal. What's the cost to receive live market data? If you're talking about in TradingView, it's $7. I believe it's the CBO with the E-mini included. I showed it before. If you didn't see it, you can rewind the video and it's on there. Byron, I'm not sure. I've had several people use. Make sure when you put in year 10 that you hit enter and that you see the little blue bar come up. I've had several people use it, so I know it's working. Just not sure exactly what's going on your screen. I believe in the product and your philosophy following Elliot Wave. Thanks for supporting us, providing your indicator. I just signed up for the yearly indicator. Awesome, Joe. Thank you. Well, we're trying to get a reversal here off a 560 area. That was support, so let's see if we get a buy this time. We're 0 for about 10 on those. The bulls have been non-existent today. Well, there's a green bar at least. That's a start. We've only had one of those today. Now 2. And it's a hammer, so it is a potential reversal bar. And VWAP is starting to flatten, so we're starting to see some weakness from the bears in that regard. Ian B, I've been in Jacob's room for several years. I can say that he's only ever looking to help everybody in there learn and make money. He stands over everything he does or says. Thanks, Ian. I appreciate that. I know I can say it, but anybody can say anything. It turns out people on YouTube lie. I don't know if you knew that. So I appreciate people from the room stepping in and saying something as well. That means a lot to me personally. Oh, this market today, so stupid. Title of the thumbnail is best indicator ever. You guys will never know. Big secret today. What a day to pick. Who knows? Maybe this is the whale coming right here. Come on. Let's get that buy signal. Been a strong sell down here at the open. They've sold it down 40, 50 points. So it is going to take a minute for the indicator. Looks like the ES is trying to flip to a buy. I can see all that. You guys can't see this. I'm just telling you what I can see. The ES is trying to flip to a buy, but NASDAQ's not on board yet. Once NASDAQ gets on board, we should get a buy signal. But as you can see, the market isn't ready yet anyway. So we'll see what we get. I've been in Jacob's room for many months now. Jacob is outstanding at what he does. Daily video keeps it clarity, especially during difficult times of trading. So glad I'm part of this group. Oh, thank you, Daniel. That's great. I'm glad you're part of this group too. I'm glad everybody who's part of this group is part of it. If you're not in my rooms, guys, the indicator is a great tool, which is what we're talking about today. But my rooms, every day at 10 o'clock Pacific time, 1 o'clock Eastern, I do about an hour live call. And we go through, what's going on for the day in the ES and the NQ, obviously. But then we go through the Mag 7, Bitcoin, gold, and then any charts anybody asks about, we pull up and find the key levels, find out what kind of count they're in, what kind of understanding. Make sure you guys are up to speed on everything so that you can trade your own stuff. I only in my room I only do the SPY and I say the QQQ. I personally never have traded the QQQ. A long time ago, people wanted me to do the NASDAQ, so I started doing it. But almost any SPY trade can be considered a Q trade. So when I say the SPY and the QQQ, most people in my room know that you can just translate any trade I make for the SPY over to the Qs because they trade in sync. There's our buy signal. Okay, we got 188 here as our cost and 562 strike. And our stop is going to be 560.90. Let me get all that in. Let's see if the bulls can find a little go juice here. All right, they back tested the bottom of this. Oh, geez. Okay. That was a hammer. All right, I got 152 on the out there, so that was not a great outcome. As I was getting ready to say, they were back testing there. Bulls have no juice so far today. So we got stopped at 152 there. That was a tough one. They hammered that pretty hard to the downside. We will take the reignite of the buy. So very often what you're going to see here, and you'll see, them come up, chop here, test this again, and then break out. So very often that will be the case. That was just a little bit of an aggressive test down. But if they reignite the buy signal, we will take it still. With the understanding that VWAP is likely going to be our target until the bulls can prove otherwise. Right now the bulls have not proven they're even here today. They put together one 2-bar set here that got immediately sold. So until the bulls can prove their worth, VWAP is our likely target for exit. And that doesn't mean we're going to close down our whole trade. It means we're going to take some profit at that level and then see what happens from there, assuming we get a buy and they can get there. Do you use previous candle to set your stop? Not necessarily. I use 50 to 60 cents on the SPY as just as my basic stop. The reason for that, I told you I'd get back into that later. So the 20% right here, okay, we'll just call this the 20% area. And the stop area, okay, this is what I call a cancel. So you're going to have stops, you're going to have 20% wins, and you're going to have stops, and all of that generally cancels out. Where the money is made is once you get to the 20% area, the breakouts. And that happens quite often. If you go back and look at my Instagram, almost every day we have at least one really, really good running trade. And we may have a loser or two in a day. That's just part of trading. Like we already have one today, but those stops, by keeping them, now today they gave us a hammer down and they went right through our stop really fast, so I was not able to get the price that I would expect to get there. So it was a little more of a take than you want, but that's, I mean, you can't do anything about that. But the stops and the 20% wins are cancel out. And actually, the 20% wins, because we win more than we lose, the 20% wins actually make money overall, but not a lot. But they keep the stops in check, and then the runners are the money. So the second half of the trade is where all of the money gets made. We'll see if we get one more run at this. Coming back to test that low. If you could share, what is this indicator based on? Yeah, I mean, I can't give you all the exact details, but it's price action, forward-looking, meaning that it's not waiting for the cross of some moving average that happens too late. It's looking for momentum. It's looking for key support and resistance areas to trade off of. It's looking for candle formations. It's looking for volume. There's lots of different factors that go in. Over 150 of them, actually. But it's the biggest difference between this indicator that we built, me and my partner built, and any other indicator out there that I can find, is that it's based off of using price action to find highs and lows, whereas most indicators you'll get, on most occasions, you'll get some kind of move like this, and then their buy signal will come in up here because it took a while for the stuff to cross over and everything to, because it's looking backwards, so it needs historical bullish data to tell you to get bullish forward. Whereas we're not looking backwards. Backwards tells us to keep shorting. We're looking forwards, looking at exhaustion, looking at, like I said, volume, key levels, all that kind of stuff, so that we can get in near the lows, and we almost always get in near or at the low or high, off of support areas. Would you be able to show your thing? Not on this, Joe, and the only reason is it's already a lot to keep track of what's going on 3 screens, really. And if I put that on the main screen, then it's going to be covering up half the chart, and it's just going to be a lot to manage. So I'll try to do a video of that. I'll just do one that's not live that I can do and film it, and just share it with the group or something so you guys can see that. But for this particular video, it's a lot to have on the main screen while I'm trying to do that. I don't like clutter on my screens in general, and that's why I keep most of my things turned off most of the time. So you're not counting Elliott waves and fibs, you're just doing what the indicator says, correct? That decline looks like a third wave with possibly at least one more low to go. It's a little bit, so no, the indicator does not use Elliott wave. I do, but I also trade what the indicator says. If you've been in my room, there have been many times where I say long here, but I don't like it, but the indicator is smarter than I am, and then that long turns into a 100% winner. And because I had a different idea of what I saw on the chart, I would have been wrong. And that happens more often than I'm right, because the indicator is looking at every single factor that that I teach in Trade Waves Academy, as well as other things, and that they aren't teachable. It just pulls data down and compiles it. So where you would miss something, there's been lots of times where a trade comes up that ends up being long, and I'm like, and it's a good trade, and I'm like, man, how did I miss that? And then I go back and look through everything, and I'm like, oh, here's what I missed. This was really strong. Well, the indicator does all that for you, so you don't miss any of those things. It's never, looking at its phone on Instagram at Reels. It's looking at the data and saying it's time to get in or out. So it's trying to find weakness down here. We had a buy signal, and you're seeing the bears are at least struggling through this support. So it's trying to buy off of this support zone that we're in. I said 560 was a huge support area. It's trying to find a buy here. We had a hammer candle and follow through, so it gave us a buy, and then the bears quickly shut that down. So we'll see if we can find an opportunity. Here again, they're getting far away from VWAP, so we would expect some kind of test of that level today. Okay, there's our next buy. We're getting in at 160. And our stop is going to be 560.25. We're going to be long here. We'll see if we can get any kind of upward momentum. Trend days are hard to trade, guys. I'm going to tell you right now. There's some skepticism around this trade, like I've said before, but the indicator's smarter than me. So trend days are hard to trade because the indicator wants to find support that holds, but on trend days they want to break support. So can be challenging. I have a 3 strikes and you're out rule. If that is the case, that's the case. That's part of it. But that keeps you out of continuously getting into trades you don't want to be in. Okay, here we go. 160 we're in at. Got our long. So we're looking for 32 cents here. So 192 is going to be our first exit. Major area of contention is going to be this 561.50 area. The top of this, they came up to it and they immediately sold it down. So the bulls are going to have to break through that first. If they break through that, we're probably going up to VWAP. But if they can't break through that, then we may continue on down here. Again, we're buying off of a key support level. We zoomed out earlier. I showed you this was key support. It's also a key call resistance wall. They want to hold this. The market makers want to hold this area. They don't want to give this up. They're going to Rick Astley this, never going to give it up. They will give it up, but they don't want to. So there are days that the market's more powerful than the market makers. But in general, they want to hold these types of levels. Again, we're looking for a 20% win to start the trade. We will take half of that off at that point, and then we will set stops and let the rest of it run. And we don't want this to go negative. We don't want to turn a winning trade into a losing trade. So should we get to that 20% win, we don't want that to be a negative trade, so we're not going to let it be. So we're going to adjust our stops accordingly to make sure it is a winning trade. What option am I trading? 562. The sequence here is pretty good for the bulls. You had a hammer candle that they tried to buy. The sellers gave it one more move down, gave you a doji low here, and now they're trying to trade above the doji. So the bulls have a setup. They just have to follow through. I have an account with Interactive Brokers. Can I trade this system in that account? So you can't use the indicator with Interactive Brokers. However, you can have a trading view account up with the indicator on it and still trade within Interactive Brokers. You can do that. I realize that's an extra screen to have up, but unfortunately, I have to look at Interactive Brokers. I know that's a big one. But like Thinkorswim is open source, so they don't protect the code. And can't do that. So right now it's only on TradingView. Rick Astley, that's right. They're never going to give it up. Does the indicator update itself when a new version is out? Yeah, so let's see if Mentor always has updates. So let's see if they have them. Okay, so when you see this little eyeball right here, there'll be a little blue circle on it that looks like a refresh button, and that will mean to update the indicator. And then you hit that, or you can go to the dots and hit latest version, I believe. Down here somewhere it'll say update to latest version if there is a latest version to update to. I don't like this little gap here. I hope they go ahead and fill it. So they're coming into the top of this bar. You can see they're starting to reject a little bit here. Again, this 561.50 area is going to be big to get through. And if they can't, it'll be continued downside. If they can, we should come up and touch VWAP. Now, VWAP is curling up a little, whereas the 21 is still pushing down. So VWAP curling is a positive sign for the bulls. One thing you'd want to do, guys, is follow the rules. And it is the number one destroyer of accounts because people get the rules and then they're like, oh, yeah, this is great. And then they don't follow them. And then they're like, oh, this doesn't work. For example, we had a buy signal. We got stopped out. You don't stay in going, oh, it's going to give me another buy signal. This is going to work out. You just got stopped out. So stop trading. Wait for the next signal and then get back in. If you don't get another signal, then you don't get another signal, and that's just what trading is for the day. Make sure you're taking profits where you're supposed to take profits. Don't assume that this is going to go to the moon. You know, take your 20%, and then I try to take at the next key resistance zone, which in this case would be VWAP, because 20% should be right around in this 561.70 area. And then, you know, if we can run it up to VWAP for the second part, that'd be great. But they got to still get through this resistance first. They haven't gotten through it at all. They haven't even poked above it. So until that happens, you know, we're kind of stuck in wait and see mode. But follow the rules. I have a 3 strikes and you're out policy, and the reason for that is the indicator is looking to trade off of key support and resistance. And on trend days, it's going to keep coming into key support and resistance because it's blowing through them. And so each time the indicator sees weakness at that level, it's going to give you a trade. They're going to consolidate and they're going to push lower like they've done today. So we'll see how it goes. But if it's 3 strikes and you're out, sometimes even 2 strikes and you're out if we get later in the day, don't trade against the trend and just say, okay, tomorrow is another day. I'll trade that. Trend days are horrible day trading days no matter what system you use. It doesn't matter. Day trading is about finding good support and resistance and trading off that level, and that will work 80% of the time. But on trend days, it will work 10% of the time. I lost a bunch of profits in one day because I ignored the rules and let my hubris guide my trades. We are emotional beings, and there's nothing that we do more frequently than make horrible decisions based on emotional state. I always, in my videos and in my training, I always compare it to dating. Think of the horrible decisions and phone calls and drunk dials and things you've said when you have broken up with somebody or somebody's broken up with you that you really didn't mean, and then you kind of want that person back, but you ruined it because you called them all sorts of names. That's how trading goes. You're just sitting here clenching your fist going, it's going to go up, it's going to go up. Instead of just saying, I have a stop. And when that stop hits, I'm out of that trade. And I have a profit target. When that profit target hits, I take some money off. and it's mechanical. You want to make trading as mechanical as possible. Take every bit of emotion out of it you can. The second you start getting emotional about trading is the second you will start losing money in droves. Do you trade options on TradingView directly? I do not. You can hook up to TradingView. I know they have um, the ability to do that. I will be honest, I am a creature of habit, and I'm very, very comfortable trading the way I trade. So the idea of learning a new way to do it makes me, I guess I'm turning into a boomer, as the kids would say. Uh, it makes me anxious to think about trying to think of a new way to trade and have to figure all that out, even though there's probably better and easier ways. Okay, so they tested that zone. They rejected it. They're back to test it again. If they can get through here, we should be able to push through back to VWAP or so. With the 21 coming down, the 21 will be the first resistance now. Man, I used to make fun of my dad for not knowing how to work a computer, and I know how to work a computer fine, but some of the new stuff I don't take the time to learn, and then I start to feel for my dad. Come on, Bulls, get through. This level is the killer right here. If they get through this, we have a winning trade. If they don't, well, que sera, sera. And guys, one thing, on this bar down over here, I kind of laughed when they gave the hammer and really spiked it well below our stop. And that's because I've been doing this for so long now that those things, instead of making me mad that I've lost money, make me laugh because of the trap or what they have done to set that up to cause that loss to happen. And that's because I have taken emotion out of trading. I know that if I lose the 30 cents there, it ain't that big a deal because I know that the next trade will be fine or the next trade after that or whatever. Because I don't need to be emotional. I know that my trade is mechanical. And so that's a really important thing to try to master, because there are some days that I still get emotional when something that I think is a little outlandish happens. But for the most part, it is very mechanical for me. I just watch the bars. Oh, they hit the price. I got to get out. They hit the price. I got to take profit and then just move on to the next trade, because I know that I would have to lose 1,000 trades to lose all my money in a row. What setting do you have for VWAP? It's whatever the standard is. It is session HLC3, standard 1, 2, 3, style, if you want any of that, and then visibility. And yeah. So nothing crazy, just whatever the standard is. It's certainly not the aggression you want to see from the Bulls here. You really want to see them. This bar was okay. So this bar here was good. This bar here coming up and testing and giving you a doji, perfectly fine. This bar coming back up and failing. You want to see them get on through. Maybe they will here. But it's certainly not the reversal aggression you really want to see yet. That can change. I mean, once they get through this level, you might see them squeeze. But for a true on reversal where we go back to the highs, I think I'd want to see a little more aggression from the Bulls here. We are seeing improvements in the internals. The ADD is improving. Come on, push on through there. Almost. So what you'll see when price gets really far away from a moving average, like it is, down here, it's pretty far away. It's about 3 points away. You'll either see they'll come back and touch that moving average, or they will consolidate here until the moving average catches up, and then they'll continue. So we hope it's the first one where they go touch the moving average, but if they can't get through this high soon, then consolidation starts to look like more of the likely scenario. Bulls are trying. I mean, they're putting pressure on that level. They're just not able to get through it. JG, you have a 50 to 60 cent stop and a 20% first take, correct? Yes, that is correct. GEX is gamma exposure. So when you see squeezes, very often it happens because of gamma exposure. In my Trade Waves Academy, I go through the options and how gamma works exactly and how gamma exposure causes squeezes both up and down. Gamma is essentially the acceleration of delta. And when the acceleration of delta gets high, the market makers have to hedge, which causes the market to continue, which causes squeezes, which causes a feedback loop, which causes more squeezes, and so on and so on. If that sounded confusing, it might be, unless you get Trade Waves Academy and you check it out on there, because there's 2 hours on options and a big portion dedicated to gamma squeezes because they're important. That's why these call and resistance walls are such big support. Because if it goes below this resistance gamma wall for the 0 DTEs, that means the market makers have to hedge. That means they're going to pile on the move. You see here when they broke up here, so they broke it, they quickly spiked back above it, and then waterfall down to the next level. And that's because they have to hedge until they get to the next level, and they'll see if they can hold here. Now, what will happen is, should they hold here and push back above this wall, a bigger squeeze will start. And they'll come up to this level next, which is the high volume level around 565. So HVL 0 T, this says HVL high volume level 0 DTE. That is a point of the highest volume of the day trading, which was right at the open today. And the Bears won that battle decisively so far. This 561.50 level is just giving the Bulls all kinds of problems. Here we go. At the next little breakdown area here, I suspect they're going to VWAP now. All right, there's our first close at 192. We're going to set our stops to 160. We'll just keep it at break even on the second half. We want to give them enough room to be able to bounce off of the level and pull back, but I don't want this trade to turn negative. So we have a 30-cent stop right now, or 32-cent stop, I should say, down to 160. And that, that'll give us a 10% win should we win, or should we get stopped out, and then we can move stops up as price moves up. Now we are counter trend today. So there's a difference between a reversal and a counter trend. Right now, I would call it counter trend until they prove they can get through VWAP in the 21. And counter trend means I'm going to take profit earlier. So a reversal, I might let it run a little more before I take my second profit. But because we're counter trend here, if we can get up here to 562.37, we will probably get another 20-30 cents on our trade, and we'll take another half of what we have left and leave a quarter to run. Just depending on price action. If it looks strong, we may give it a little further. But basically in this, this comes back to test yesterday's low as well. So this area is going to be pretty good resistance. They back tested it twice over here as well. So the bulls know what's in front of them. They got to get through 562.50 is what I'm going to say, which is a little above the VWAP line. If they get through that, they can really start to kind of push. And then back above 563 would be really big. So you'll notice, guys, when we talk about price action, it didn't waste any time with a buy here. It didn't see enough strength off of that key level because they broke through the call resistance level. It didn't waste any time with a buy here. It gave you a buy here because it was coming off this 560 area. It deemed this as the necessary support for several reasons. And that one failed, obviously, but it was the right area. It was just a little early, and you'll get that sometimes. And then it gave us the winner here off of a market that was just really careening down the whole day. Sean in my room always says, how does it know to buy here? And it's because it knows where the supports are, and it knows where the resistances are, and it knows how to find reversals off of that if the criteria is met. And just so you guys are clear, the criteria is looking for a 7 to 10 ES bounce, 7 to 10 point ES bounce, or rejection, one or the other, just depending on which side we're on. And then with potential. So it's looking for an area that can deliver at least 7 to 10 points. Okay, we just got stopped out at 160. So our trade is going to be 176 average exit. So that was like I said, that's a small winner there on the bounce off of support. It gave you the run up that it thought was necessary. They got basically back to the 21, not quite, and failed it. So we'll see if we can get a sell or a buy stop here, a long stop, LS. And if we do, that'll initiate another buy. We are not going to get a sell signal on this bounce. It was not a big enough bounce for the market to get out of the overall sell cycle. So in other words, the market's in a sell. The market says we're weak here. Everything is weak. And then it says, hey, the move down is starting to slow down. So we're looking for a bounce off support here. This bounce did not show enough strength to get me out of the strength of this move down. So this is just continuation, if that makes sense. Hopefully that made sense. You have the call resistance on the chart, but no put wall. It's probably farther down, honestly. Oops, sorry. Yeah, it's down here. 555, it's another high volume level, so I would very, very much be looking to long that area if they get down there. When a high volume level also happens to coincide with put support or call support, those are levels that generally hold strongly. These two didn't quite coincide. They failed this one, and then they failed this one really quickly, but yeah. How do you get call resistance levels? That comes in from Mentor HQ. You can see right here, it's Mentor Q, not HQ. Mentor Q gamma levels. It's a website. You'll have to get their membership and pay for it, and then you can integrate it with your TradingView chart if you want. Thanks, Joseph Rapp. I appreciate that. Yeah, everybody give a thumbs up for a winning trade, right? As a small winner, the 2 days I've picked a live stream have been two of the slowest / weakest trading days, but that's how it goes. Bulls and bears are the same people. That's a fact. That is a fact. Bulls and bears are the same people. That it goes so slowly. I'm not sure what you mean by that, Connie. We'll try to hang out here for a little longer, maybe get one more trade on the day. We'd still be looking for a long at this point, but it does look like a trend day. So I talked earlier about trend days. The first thing you want to see is you want to see the pre-market low break or the pre-market high, either one. Trend day down, obviously, you want to see the low break. Then you want to see them be below the 21 in VWAP, which is the blue and black line. Then you want to see them back test that blue and black line and hold, and then continue lower. And then that will continue to be the theme of the day. Back test the 21, continued lower. Did you call in sick just for the live stream, Will? Will said he got his first day trade win ever. That's great. I'm glad to hear that. I assume it's because you work and you don't day trade. If you do day trade every day and that was your first win ever, then I'm very sorry for you. It's ugly, but if the bulls can hold here, you have a little bit of a breakout pattern setting up. It's not a great one, though. I wouldn't be like, oh, yeah, this has to happen. This shoulder's too high over here. But I wouldn't be opposed to it. Byron, send me an email, jacob@investwithjacob.com. And since you couldn't get the discount code to work, we'll figure that out. I can PayPal it to you or something, or refund it. I can't refund it because anytime I issue any kind of refund, the system turns off the indicator. But what I can do is just like send it to your personal PayPal or something like that. But I'll make sure you get the discount. Don't worry about it. Like I said earlier, I'm not here to ever screw anybody over. I believe in everything that I do and stand by all of my products. Yeah. So if you had issues, I'm happy to help you. So this would be an unfortunate setup. It happens sometimes, but the move down, right? You get a buy signal. The buy signal holds. We never get a return to the sell form, and then they continue. So we never got a stop here on this buy, technically. So if they continue and blow it out of the water to the upside, we won't get a long signal, which is unfortunate. That happens sometimes. Again, not every situation you're going to get every trade. It's impossible. You got to remember we've already tested this area 3 times now, so it's getting weaker. I would prefer they just spike a low, give us a sell stop or a long stop, and then reverse it so we can get the buy signal. But I don't get to make the rules in the market sometimes. Actually, all the time. If I got to make them sometimes, that'd be enough. Elliott wave worked better 20 to 30 years ago. Did computer algorithms target Elliott wave techniques to make it more difficult? No, I would say that Elliott wave works just fine now, and it worked just fine 20 years ago. What's making it more difficult is the 2022 low was a wave 4 that got into wave 1 territory, which made a diagonal setup. And that makes every single move up a 3-wave move and every single move down a 3-wave move, which makes it really incredibly hard to decipher. And that's at any level, whether it's the 5-minute level or the weekly level in this case. And so when you get a weekly diagonal, that takes a long time to play out. It's really confusing and it's really hard. And corrective waves are not what Elliott wave is built on. It's built on impulsive waves. And we have not had an impulsive wave as a complete move up. Obviously, you get C waves, which are impulsive in those moves, but we haven't had a real impulsive wave since the move up to the highs in 2022. And so without those, Elliott wave is still effective. You can still use it. It's just not as clear as it is when you have 5 up and 3 down, because real quickly, while we wait for the market to kind of sort out, you're looking for 1, 2, 3, 4, 5. Then you're looking for a corrective pullback. That tells us that more often than not, we're going to come back and start doing this again. Well, that's a 5 and a 3. If the move up is 3 waves and the move down is 3 waves and then the next move up is 3 waves, well, now you don't know the difference. This could be an ABC correction. It could be a double 3. It could be any kind of thing that is either impulsive or corrective. And that's where the problems come in. And that's what we're in and what we've been in for a long time. And that's where we're going to be probably for the next, like I said, 10 to 20 years, because even if we do push back to the high, we're in a diagonal. Once we make the high and the market does finally be done, if it isn't already, the correction will be corrective waves. So it's always corrective waves you're dealing with. And that's where the challenges have come in of recent time. So the bulls are trying to build a base here off of 560. The bears have tested it 3 times. Right now, until they break back above this high here at 562, right now it's looking like a bit of a bear flag. So I would not be shocked to see them move lower. But if they do break out here, over that, then the squeeze is probably on to the upside. So one thing you'll learn in TradeWaves Academy, if you do decide to take it or buy any of the modules, if you just want to learn about price action, is all the market is a series of traps. It's a series of traps for liquidity, because the buyers and sellers, the big guys, the institutions, they can't buy the market to infinity, because at some point there's no one selling the market anymore. They can't sell the market into the ground, because at some point there's no one buying the market anymore. If you're going to sell, you have to have a buyer, and if you're going to buy, you have to have a seller. So what do? They give squeezes. So when the market's going up, everybody and their mom has FOMO. They're all in. They're telling you about Bitcoin and the cabs. Everybody knows about everything. Well, when that's happening, that means everybody's buying the market. So the institutions can't push price up because there's no one here that's selling the market. So what do the institutions do? They turn from bulls to bears. Somebody said bulls and bears are the same people. They are correct. So they turn from bulls to bears, and they liquidate. So they do it quickly. They dump all of the shares in big volume to push price down to a level that they like. All of the terrible retail traders who had FOMO and bought up here now sell down here. And now there's people who want to sell the market, so the buyers can now buy the market again. And then once they get back up here, there's people that say, oh no, this is the top. We're going to sell off of the top. So then they get those people to try to sell the market at the top, so then they can squeeze them and push price higher until they get to a point where there's no one selling the market again. It's just a series of traps. So people see things and it creates emotion. That's the whole idea of these strong moves, is to create emotion so that people make terrible decisions, so that people lose their money and they can get liquidity for their moves. They can't move the market straight down because eventually no one will buy the market. They can't move the market straight up because eventually no one will sell the market. So you get these traps, and here is, if they were going to follow through, this is a classic example of one. We've made a low. Oh, we're going to break out. No, we failed. So you get the shorts coming back in here thinking, oh, we're going to make a new low, and then they squeeze those shorts and take it out of here. Now, obviously that did not play out here, but all the market is a series of those things. And you know where those traps are going if you know what the key support and resistances are in the bigger picture. You know, in day trades, we're looking for little bounces, but in the bigger picture, we're looking for key levels. And the reason, by the way, those are key levels is that's where the bears and bulls know, same people again, that people will buy and sell the market. So they want to push to that level, get to where they're going to break people, get the buyers to break, and then reverse the market on them. Or get the sellers to, either way. All right, guys, we're going to give it to about 8:30. I think that's about how much time it'll take to potentially get a long stop, hopefully, here, and then get a new buy signal and see if we can get any kind of movement. If we get that at all. If we don't and they trend, then they trend. If they bounce it before then, they do that too. I mean, there are potentials where we don't get trades as well. Hourly chart with key levels? Yeah, we can do that real quick. The hourly actually doesn't look bad for the 7 o'clock hour. How much time we got? And then, well, they need a little more green, but it's a doji, and if they can start to trade back up, it'll be okay. This key level that we're at right now, this 560 level, is where they're trying to hold. So this low off of the 21 on the hourly that they held, this is where they're trying to hold right now. They're above it. They held above it. They held at this low right here. Breaking this does open the door. Let's see how far down. Actually, this is huge support. Breaking 560 is likely to be a little bit of an issue for the bulls. They will probably bring it down to 555. But really, where the support wall is, off of this breakout area, these lows right here, and this spike low. And then you got put support. That's going to be a huge level. So 555 is a huge level, and then 550 from here. Hopefully, in lieu of not getting too many trades today, you guys have at least learned something about the market, learned how to kind of identify support and resistance, trend days, those types of things. Okay, so they're fully into the call resistance now. They've actually tagged it. So they came almost to it, almost to it, almost to it. They actually tagged it here. We'll see if they can get through it. OPEX manipulation. It is options expiration week. They do trade. And you got Fed tomorrow. So there's a lot of catalysts this week that's going to move the market around. Okay, there's your breakthrough of the support. So this bear flag is playing out. So essentially all they did here was consolidate and let the 21 come back down to price and the VWAP. They didn't quite touch it, but we did get the win off of this trade where they came back, up to put it in an area where they could get to it. Okay, we're getting a long stop here, so that's a plus if you want another trade, as long as they can close it out with the long stop. Guys, I see all of the signups. I appreciate all of them. Please note I will get them as soon as the live stream is over. You will have access to the indicator. Remember, you'll go to indicators. You're probably going to have to sign out and sign back in, by the way, just to refresh it. Or if you refresh your screen, I don't know if that works, but I know some people have had to sign out and sign back in. But if you go to indicators and go to invite only, you'll see it in there, IWJ Pivot Point Pro. Come on, get back down there, get that stop. Is there any questions? Does anybody have questions just about, trading the chart? Any of it? I'm open book. While we're waiting, I'm happy to answer any questions anybody has. down today? About 9, 10 points? 7. Oh, they hit a high of it, yeah. So they're down 9 from yesterday's high. Does the indicator update itself when a new version is out? No, you tend to need to do that. There's a little circle that'll come up here. So right here where the eyeball is, there'll be a little blue circle. If you click that, that means to update it, and then you can update it. I usually send a message out if I have a update as well. JG, will you ever do a subscription with us watching your indicator so we don't have to get live feed from TradingView also? No. It's a lot of work to do this and trade, and a lot of people in my room have questions that are separate from this. They want to know other things that they deserve to get because they pay to be in there. So unfortunately, probably not. And if it was a subscription, it'd be more than $7 a month anyway. So I think it's probably best just to have the live feed. Obviously, you're a longtime student of EW. From whom did you learn so much of it? I see value in. Just get lost in counts. Many thanks. I actually learned from Avi Gilbert. He is very, very good at what he does, and I learned a lot from him and wanted to do my own thing because of different reasons that don't need to be put public here, but that's who I learned from. Books, I read several books. Couple other people outside of that aren't known by anybody. But yeah. How many contracts do you buy or sell to start making some good money? So I do 25. But you have to do what's right for your bankroll or your capital, whatever you want to call it. I'm a poker player, so I always use the word bankroll. So you should be. So right now I do about a half size trade for every day trade, which is 25 contracts for me. But you should be in the 3 to 4, as high as 5% if you want to go that high of your overall total. Because if you, let's say you have 100,000, right? It was for easy math. So 5,000 would be the highest trade that you'd get, which should get you 25 contracts in most cases. Then if you lose 30 cents on 25 contracts, that's $750. So $750 loss is less than 1% of your overall bankroll. So you invested whatever to get the 25 contracts. You ended up losing $750. So you're losing less than 1%. So you'd have to lose 100 trades in a row to get to zero. But good money is relative. You have to remember, if you go to the bank and ask for a savings account and you can get better than 3%, that's a win. I know some of them are given 5 or 6 now, but if you get a Roth or something, and on the year you're making 8 to 10%, that's generally considered a good return on investment. We made 40% last year return on investment based on a 100K account, meaning we had 100K to start the year, we had 140 to end the year. So it was actually a little more than that. I'm just using round numbers. That is an incredible return on investment. And there are years that the market will deliver that. But good money is 10% plus on your money. Anything that's over 10% is a good return on investment. Now, if you're not outperforming the market in general, then you should just have your money in the market. and let the market do it for you. So if the market was up 38% last year and you were only up 20, well, you lost out on 18%. Yeah, you had a year, you made 20%, but you were not outperforming the market. And that's what the key is. I mean, last week, I went through our trades from last week, and we were up for the week. I think it was $2.40 or 60 cents. I can't remember for the week. Now that translates to, we'll just call it 250. That's in between. So that translates to $250 per contract. For 25 contracts, it was about $5,000. I think my total was 5,600 for the week. That averages out to 250,000 for the year. Now, is every week going to be that? No. Some are going to be better. Some are going to be worse. In January, we had a record month. We made, I think it was 14,000. I don't have the numbers in front of me right now, but it was 14,000 for the month, which is, you multiply that times 12. That's a good year. So, good money is a relative term. To somebody who has $1,000 starting, $100 might be good money. To somebody who has 100,000, 20,000 might be good money. It just depends. That's a relative question. Remember, this is not a get-rich-quick scheme. This is not put all your money in on every signal. You will go broke because you'll get too emotional. It's too hard. This is not trading isn't. Are there guys who have gotten rich overnight because of, say, Bitcoin or Nvidia or whatever? They bought the right stock at the right time? Yeah, of course. That happens. Those are rare instances. Those are, the golden goose. You just find the right thing at the right price and nailed it. However, people who put all their money in on an options trade and double, triple, quadruple up because they hit it will likely be broke at some point because there's too much pressure, too much stress, too much emotion, and it's just not a good trading strategy. Warren Buffett said, "You only want to get rich once." And that's one of my favorite quotes in the stock market. I'm so mad that they cleared that sell stop. I don't know if I am or not. They haven't done anything yet, but that long stop. Had we got that long stop, we could get a long trade here, but unfortunately, that's not the case right now. So you can interpret this two different ways. I'll leave it open to you. The first interpretation is the indicator thinks the market is weak on the sell side. In other words, it thinks that the selling is dissipating. And the reason I know that is because we got a high, then they came all the way down and made a new low, but we still haven't gotten a stop on the buy. Now, that is one interpretation of the overall buy signal here. The other is that the buy signal is so weak it can't even get off the mat. So it just kind of depends on how you want to look at it. But typically, when the buy signals start to appear on trend days, they are starting to indicate that there's a general weakness in the selling, or that the selling is low volume, and when high volume returns, you'll see the market reverse, things like that. So we'll see if they're able to hold and race it higher here. You do have a nice 4 or 5 finish. So if you have a move down and then you have a 4 and a 5, so this would be 3, 4, and 5. Certainly possible to see another 4 or 5 like that. But we'll see if the bulls are able to rally up out of here. And if they are, we'll probably end the live stream then, because we're just not getting any trades. And unfortunately, the path of the market today was not super conducive to our trading. Basically going to end up with a small losing day if that happens. One winner, one loser. One thing, guys, the reason I give the 30-day money back guarantee on the indicator is because you're going to have a losing day. You're going to have a losing week. Sometimes in November and December, because the holiday trading is so low volume, you might have losing months. But I have data that shows over the entire year last year, we were up $40,000, $40,000 plus on a 100K account. So the 30 days is so you can see that there are going to be days that are like this, where there's hardly any trades. There are going to be days where you just have a couple of losers or 3 losers and strike out. And they're going to be winning days. And that is trading. All of that is part of trading. Because if you were able to win every trade, or if trading was easy, we'd all be rich, right? We're not all rich. And quite frankly, 90%, including most of those on YouTube, 90% of those folks who are day trading are losers. We have documented results with our indicator, with my room, because day trading is a very emotional game if you let it be. But if you follow the rules and you use the proper stops and profit management, you will be successful. With purchase, is there a training that shows to set up the chart? Yes, there are training videos. Right when you purchase it, you'll also fill out a form so I can get your trading view username, because I need that in order to connect your account. But yes. Jacob, do you see 5 down or just ABC down? Are you talking about off the high? Off the high, it's an ABC. But this move down, I think I could get 5 down out of if I zoom out here. Yeah, your wave 2 is pretty shallow, but I can count this as 1, 2, 1, 2, potentially 3, 4, 5 for 3, and then 4 and 5, or you might need another 4 or 5 here. 4s and 5s are always a little tricky, but we could definitely have enough to have a full move down here. And we are at still very strong support. If you're talking about off the all-time highs, it's still an ABC to me. Now that's on the ES. I still think it's an ABC on the SPX and SPY as well, but yeah. All right, guys. So the codes expire as soon as this enters. So if you want to get the indicator, I realized today was not the best showcase, as we just didn't have any trades. The market moved straight down and then has chopped since. So if you were, trying to trade a 3-point gap down, then you got it. We just don't chase here. The stop or the sell was back before the market opened, and they would not issue us a stop here, which would set up a new long. So we're not going to get a long unless we go down and then back up. So I'm going to go ahead and get ready to wrap up this live stream, but I do want to give anybody who's wanting to get the indicator at the discount a chance to do that. Again, you will not see the yearly discounted again. This is the only time. And until, maybe next March Madness, or like I said, my 50th birthday, I just don't need to do that. But I do like to help people out from time to time and give a little deal. When's my next live? I'm gonna probably do one. I'm gonna do one once a week for a while, and at least through March. So next week and maybe the week after, just to kind of keep going through. I'd like to get one where we actually get some trades. This 2 times now we've had low volume of trades. The first one we had a small winning day. Today a small losing day. So every day I pick seems to be the wrong day. All right, guys, I'm going to wait. So it's 8:20 now. The coupons will expire at 9 a.m. my time. So on Pacific time. So in the next 40 minutes, you have to get the indicator if you want to. Otherwise, those discount codes will be gone. And then if you want the discount code for TradeWaves Academy to get that at half price, if I saw that you got the yearly, I'll shoot that over to you. All right. Thanks, everybody. I wish we had a better trading day as far as just even number of trades. We'll see what happens the rest of the day, but we'll do this again next week so that we can hopefully get some trades going on the screen.